Imagine going to sleep with a perfectly stable budget and then, waking up realizing you need an extra $2 billion just to keep your planes in the air? That is the exact reality Delta Airlines is dealing with this morning.
Yeah, geopolitics is expensive, but they also somehow just posted their biggest first quarter revenue on record.
It is a massive paradox. Welcome to Earnings Unscripted. It is Wednesday, April 8th, 2026, and we are unpacking Delta, ticker DAL, and their Q1 results.
And just really quick, before we start, we are simply sharing our personal takes here. This is not financial advice. If you trade airline stocks based on what Miro and I say, you probably just enjoy turbulence way too much.
You definitely do. Look, the tape action today perfectly captured this weird friction. The stock gapped up pre-market to almost $75 on the revenue beat, but then it faded aggressively during the regular session. It just dropped almost 7% from the open.
Right. It finally leveled out around 68 by the closing bell, so it still finished up a net 3.6% against yesterday, but man, that intraday chart is rough. What actually spooked the market?
Well, someone finally listened to the earnings call. You have record GAAP revenue of $15.85 billion. That is up 13% year over year. But the bottom line is, let us just say, complicated. A GAAP net loss of $289 million.
Wait, but adjusted earnings were 64 cents a share, right? Which is up 44% from last year. So the core business of flying passengers is actually doing really well.
No, it is doing well if you look at the front of the plane. Premium ticket revenue surged 14%, plus they pulled in over $2 billion just from their American Express partnership.
But the underlying operating costs are brutal right now.
Right, the fuel shock. Ed Bastian literally told Wall Street they woke up today with completely different fuel assumptions than they had the night before. Because of the Middle East conflict, they are modeling $4.30 a gallon for Q2. That's a staggering $2 billion hit out of nowhere.
Exactly. And that's why the adjusted operating margin is sitting at just 4.6%. They're squeezing out profits by catering entirely to, I guess you would call them macro-immune travelers. Basic economy is basically an afterthought at this point.
Wow. Okay. The macro-immune traveler. That tells you so much about where the consumer economy is right now. Oh, and I also noticed their third-party maintenance business, the TechOps division, that completely surged too, right?
Right. Revenue more than doubled there to $380 million. They're aggressively pushing B2B services, fixing other carriers' planes.
Okay, so they're essentially a premium credit card lounge that also runs a mechanic shop on the side. All right, let's get into the details on how they're actually going to offset these crazy fuel costs.
Well, they are basically just going to stop flying the junk routes. Look, when airlines take a sudden hit on fuel, the instinct is usually to fly your way out of it. You cram in more volume to dilute the unit cost. Delta is doing the exact opposite.
So wait, they are just shrinking the schedule? Because you would think pulling capacity takes months to actually figure out.
Normally, yes, but they explicitly declared a downward bias on capacity for this upcoming quarter. If a red-eye flight burns $4 or $5 a gallon and it is only half full at 3 a.m., they're just cutting it entirely. Bastian actually had this incredibly cold logic on the call. He said, and I'm quoting here, "The best type of fuel recapture is not to purchase the fuel in the first place if it is not going to be profitable."
I mean, that is brilliant. It's the ultimate zero-based budgeting. Just leave the plane parked.
Right. It is addition by subtraction. Because if you keep running those marginal hours, your unit economics just collapse. And let us be honest, the macro-immune traveler you brought up earlier, they're not taking a midnight flight out of Omaha anyway.
That is so true. And it perfectly lines up with what they're doing to the physical planes themselves. Did you see the fleet remapping data?
You mean the premium footprint shift?
Yeah, it's wild. The older aircraft they're retiring right now were configured with maybe 30% premium seating, but the new deliveries replacing them are pushing 50%. Literally half the physical real estate on the new planes is going to the top tier. They're physically rewiring the airline for people who ignore gas prices.
Which builds a very nice moat. But The actual literal moat here, the thing truly softening this fuel blow, is Trainer.
Okay, yes, the Monroe Energy Refinery in Pennsylvania. I constantly forget they actually own an oil refinery.
They're the only U.S. carrier that does. And analysts generally roll their eyes at it because running a refinery is a strange capital allocation for an airline. But right now, it is completely bailing them out. They expect that asset to deliver a $300 million benefit in Q2 alone. It blunts the massive spike in refining crack spreads that every other peer airline just has to blindly swallow.
Wow. So instead of just paying the middleman markup on jet fuel, Delta is their own middleman.
Exactly. And they actually just tweaked the accounting for it this quarter. They updated their non-GAAP methodology to exclude settlement gains or losses on Monroe's inventory until that fuel is genuinely sold, which really just removes bizarre paper volatility from the P&L.
Because they have enough real-world volatility to deal with.
Clean up the noise, exactly. It gives Wall Street a pure look at the core operations. But look, even with the refinery doing heavy lifting, management admitted they're only going to recapture roughly 40 to 50% of that $2 billion fuel headwind in the near term. The consumer can only absorb fare hikes so fast.
Right, which means they're still eating a massive chunk of that cost. So if they're deliberately flying less, leaning aggressively into 50% premium cabins, and relying on their own oil refinery, what does this company actually look like down the road? Where does this leave them heading into the rest of the year?
Well, it looks like a stress test for their pricing power. I mean, they're guiding for low teens revenue growth in the June quarter and aiming for a 6 to 8% operating margin, which is wild when you remember they are still digesting that massive fuel spike.
Right. It is basically a giant game of chicken with the traveler. Just, how much can we raise fares before people finally stay home?
Exactly. And Wall Street is genuinely nervous about that exact timeline. Looking through the data, 13 different analysts actually just slashed their earnings estimates for this upcoming period. They do not believe you can drop a $2 billion fuel bill onto consumers that fast without breaking demand.
Yeah, that totally makes sense. It always takes a multi-month drag to pass those costs through. But I did notice Bastian had a very reflective moment on the call. He said high fuel prices have historically been the most powerful catalyst for change.
Mm-hmm. Yeah.
So it feels like they're almost using this crisis to permanently restructure the airline, just chopping out that off-peak flying for good.
Never let a good crisis go to waste, right? It is essentially a forced evolution. They're trimming the fat and betting the entire house on that high-end demographic holding the line.
So I guess that's what we're watching for next quarter. Will those premium flyers keep swiping their cards no matter the price, or is there a breaking point even for them?
That's the whole thesis right there. If that upper tier holds strong, Delta looks brilliant. If the consumer balks at the fare hikes, well, there's no oil refinery on Earth big enough to patch that hole.
Okay, fair. A slightly ominous thought to leave it on, but I think that perfectly sums up the tension here. I think we officially parked this one at the gate, right?
Blocked in and powered down.
So if you want these earnings drops to just magically show up in your feed, go ahead and follow the show. As a quick aside, we are actually experimenting with AI to generate these episodes, which is exactly how we can turn a massive financial filing into a conversation this fast. We would really love to hear your feedback or any ticker requests, so just shoot us an email at earningsunscripted@datamadness.ca or check the X link in the show notes. Thanks for hanging out with us today.
See you next time.